What's going on, everyone? Welcome to another video. So in this video, I'll be covering how to find the strongest supply and demand levels to trade off. So to help you basically avoid all the weaker and not strong zones where you can actually have a lot of potential losses just by looking at the wrong zone, right? So there are a key couple of things that I like to point out when you're looking for supply and demand levels. So the first one would be you really need to look for some sort of break of structure on the move. So basically what this just means is if you have a potential demand zone, you need to see, well, previous highs being broken. And obviously, the more you can see previous highs being broken, the stronger the level. And obviously, this goes the opposite way for supply levels. So we want to see as many lows as we can. So if we have a supply level, we would like to see more lows being broken. And it just means that this original level where the supply was created is a stronger level, right? So always keep in mind when you actually have a supply level or a demand level, how many highs or lows did it actually break? And you will see the more it broke, the stronger the level is. Now, point number two is consolidation before the move actually happens. So when we have this supply level where multiple lows have been broken on a smaller time frame up here, we need to see some position stacking, some consolidation, right, on a lower time frame before the actual move happens. So this could be like on the M5 or on the M1. I usually look at the M1 and see how the structure is within this will supply, basically, right? So if it would just be like this is our supply level, right, and broke multiple lows, but then in here on the M1 is also just a quick move up and a quick move down. I'm not even looking at this supply level, right? I really need to see in this move, I really need to see consolidation, position stacking, and then a massive drop. So you can see traders are trying to stack their positions here and load before the actual drop happens, right? So this is really important to have this consolidation before the actual move. That we need to see follow through. Basically, with follow through is if we just have one candle like this, right, that broke a certain low here, but we don't really see follow through, and then we see maybe like a weak bearish candle or another super weak bearish candle, and then maybe, you know, a bullish candle over here like this. There's not really like follow through, right? We really need to see an aggressive move down on the time frame that we're looking at for this certain supply or demand zone. So we really need to see that apart, obviously, from the consolidation before the move and also the break of structure, right? So these are three very important points. Number four is ideally a fresh level. This is not just, it doesn't have to be a fresh level. So like I said, used levels can work too. So once you have, sorry, let me just change the color for this. Let's just say you have a supply level like this, and it's valid because, well, it broke multiple lows, right? And then price comes back for the first time into this fresh supply. We try to short, and let's say we actually have a reaction. If price comes further back up again to the same level, well, this level could be used again. It's just really important that you look at this move. If it actually was able to create, again, a strong, aggressive move to the downside. So if this move was very, very slow and not aggressive, and it took for ages to go down, then this level probably is going to become weaker. But if the first test basically of this supply zone was also really aggressive and fast and maybe broke even structure again, when it comes back, there's a good chance that this area could react again. It has to be made from an engulf on point number 5, right? An engulf candle. So we'll do a supply example. So let's say we have this low right here. Yeah, we have this low. So the candle that makes the supply has to be an engulf, right? So it has to close beyond the open basically of this previous bullish candle, right? And obviously the opposite for a demand zone. So we really need to see an engulf that created the supply. We need to see a ideally fresh level. We need to see consolidation before the move happens. So in here, in these two candles, we need to see, especially in this one and maybe in the beginning of this one, we need to see on the M1, we need to see a lot of position stacking, and we also need to see break of structure, so it needs to break lows, right? And basically, those are the rules for my supply and demand levels. Now, the time frames, I start always on the H4 and I go down usually to the M15. I don't really draw too many on the M15 as it gets a little bit choppy. But as you guys already know, well, the higher the time frame, the stronger the level usually is. So let's say I have a H4 supply level, right? I have a H4 supply over here, but then I see that there's a lot of consolidation at the top, and then there's already a big part of the supply zone that is just dropping. So I might go down on a time frame and see if I can adjust the supply zone to just this area, right? So maybe I'll find on the H2 or on the H1 or on the M45 where the zone just includes the consolidation before the actual drop happens. All right. So these are the main points that I look at to validate any supply or demand level. Try it out for yourself as well. So let's get now to the charts and look at some examples, including all these points. So let's start off on the H4 time frame. You can see 240 minute. This is on NinjaTrader, which is the broker that I used to trade of. So first of all, we need to see a break of structure. It needs to be made of an engulf. We need to see follow through. We need to see consolidation within the move. So for example, this move right here, you can see it's an engulf. There is follow through. Could you say that it broke structure, but it's not the cleanest, of course, because we have this gap up here. So we could maybe even look on the line chart and see, you can see this low right here. You can see it actually broke structure on the H4. So we'll mark that zone out on the H4 right here. And we'll mark it as a supply. And now everything is already valid for us. It's an engulf, there's a break of structure, there is follow through. Now we only need to see if there's consolidation before the actual drop happens. So let's take a look on the M5 first and see if we see consolidation. As you can see, there's not really too much consolidation in this move. It's basically just a move up and then a move down. So I don't like this on the M5. Let's look on the M1. So on the M1, we can actually see a little bit of consolidation right here before the actual drop happens. So let me just adjust this to the consolidation area, and I will drop on time frames and see if we can actually find a valid supply that goes together with this consolidation. So again, on the 3-hour time frame, the zone would be bigger and would also include a big part of not the consolidation alone, but also of the drop. So I don't like this. Let's look at the 2-hour. 2-hour, same thing, would also be drawn to here. Let's look at the 90-minute. No engulf there. Let's look at the 1-hour. An engulf again, but again, it would be a bigger zone, which I don't like. This is already looking a bit better on the M45, and then the M30. Let's take a look. Nope, nothing there. The M15. Okay, in the M15, we actually see something here. So we have a slight engulf, and our zone could be drawn a little bit bigger. So we'll just draw it like this, as it's not a lot bigger. So we mainly include the consolidation and maybe just a little bit with it, right? So there you go. We have the consolidation included. Just a tiny part of the move, but it wouldn't be as big as, for example, H4 zone or H2 zone or all the other time frames that we've went over. So this would be a valid zone for me. Now let's look again maybe on the 3-hour time frame and see if we can find a demand example. So let's see here, for example, we have an engulf. We see follow through, obviously, with the gap up and everything. Is there a break of structure? Yes, it broke this high. So there is break of structure. Now we only need to see if there is consolidation before the actual move happens. So let's draw this as a demand. And now let's look on the 5-minute and see if we can find some consolidation before this move happened. And there you go. Look at that. See how much consolidation there is. Yeah, so much position stacking before the actual move happens. So on the M1, for sure, we will find some even more consolidation than on the M5. And there you go. And even the consolidation area is a bit bigger. So we'll just draw it a bit bigger. And we'll go down now on time frames and see if we can find maybe a demand zone that fits with this consolidation area. And there we go. Just on the 2-hour time frame, we find an engulf, we found a break of structure, we see follow through, and we know there is consolidation before the actual move happens. So this will be a clean example of the H2 demand, and as you can see, literally look how it tapped, guys, like in the during the market session, but obviously way too late. Like I wouldn't be trading this, but it's still great to see that it just wicked into that consolidation area, into this H2 demand, and reacting beautifully from there very quickly as well. So obviously I wasn't able to take this trade, but this is a level that I will be still watching in the future, as you can just see how this is not a fresh level anymore, but it has been respected, and a nice reaction came from it. So there's quite a lot of follow through, and on the lower time frame for sure we can see some breakout structure. It is well happening right now on the H1, and basically on the M45 we can already see that it broke these highs. So we can see there was a nice aggressive impulse from this move, and now just a little bit choppier because obviously this is the pre-market. And yeah, so we can see nice reaction from this H2 demand zone. So this was a clean example of an H2 demand zone with follow through, with, you know, being an engulf as well. As you can see right here, you see it's an engulf, there is follow through, there's a break of structure, there's a lot of consolidation on the M1, and these are the best zones to look out for, because these are the ones that are going to give you the best setups as well, right? So really keep all those points in mind, right? Remember the slide that I just showed, keep all of those things, make it like a checklist or whatever, like whatever helps you, right? If you're looking at supply and demand areas, and really look if there's break of structure, if there's consolidation before the move happens, you need to see follow through, ideally first level, and you will see if you add all these 5 points basically to your supply and demand levels, you'll have a lot less zones on your chart. It will look a lot cleaner, and you will take less trades, and you will take higher setup trades, right? So anyways, guys, I'm gonna wrap it up here. Hope this video was helpful. If you have any questions, let me know in the comments down below, and I'll see you in the next one.